Okay. Do a quick sound check. Welcome back, everyone. Our video seems to be coming through okay from my side, but I'm not sure about the audio. Okay, audio seems to be good. Very happy New Year to you guys. This is, well, I think this would be the first webinar that I'll be doing in 2024. But yeah, we missed the NFP last Friday. But it's all good because I think the market is still waiting for the CPI number, which is going to get released on Thursday, which is on the 11th of January. Okay, so for tonight, as per usual, we're going to go through some of the theory and some of the practices in terms of using the order types. So welcome to News Trading Session, where we talk about the theory and practice. And my name is Vidya Jodo. If you have any questions, feel free to type it in the chat, and I'll be more than happy to look at that. All right, just a quick disclaimer before we begin. Any opinions discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reactions to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be attentive when determining the volume of your transactions and consider all possible risk factors. We'll talk more about the lot sizes as well. I think we have time for tonight. There's actually going to be a trade balance news coming out in about 30 minutes time. I'm not sure if we're going to get a reaction in the market, but we'll see what happens then. All right. Bonuses for participants. You'll get the promo code to double your deposit bonus. So you can use our promo code for 100% deposit to double your deposit and maximize your profit potential. And you should have access to the private Telegram channel if you registered for this webinar through the website. And if you register your email, you should be getting that Telegram link through your email. With session trading will be good. We can talk about that as well. I think we should have enough time. All right. So a little bit about myself. If you guys are new here, I've been a full-time trader with over 19 years of experience. Full-time, 19 years. Part-time, more than 19 years. 2024, so that will make it 20 years of full-time trading. Professional trading coach and technical analyst since 2007. I also use Ichimoku Kinko Hyo and in Australia at the very least. Was one of the leading experts in Ichimoku Kinko Hyo. Also own a company called Zenifix, an independent market consulting company, and have been invited as a guest speaker at trading investing expos across Australia, Invest Fair in Singapore, as well as the ATA and the APTA conferences, which is the Australian Technical Analysts Association and the Australian Professional Technical Analysts. All right, so that's a little bit about myself. So for tonight, what are we going to be discussing? We are going to take a look at some of the advantages and disadvantages of news trading, some of the most profitable news for trading. Obviously, the inflation number is key. The NFP is the other one that a lot of traders are focusing on. And then we'll take a look at the three main phases of price movement, because what we're looking at in the market for this week is actually one of those phases. And it does provide a really good opportunity if you guys, want to find out how news trading works. We just posted out the Outlook. I think it got posted out today. If you haven't seen the Outlook, feel free to take a look at the Outlook. It is about 17-18 minutes, but it will prepare you for the inflation number that we are expecting for this week, sorry. So some general rules for news trading as well, and then we'll go through some of the examples of the pending orders. There are going to be two different strategies. One is the buy and sell stop strategy. The other one is the buy limit and the sell limit strategy. And then we'll talk more about trading after the news release as well. Okay, so this is the promo code that you can use. I know it still says 2023. It's going to get updated soon, but this one here should still work. It's non-farm 2023, so make sure you are using this code if you're depositing into your Octa trading accounts. Again, the code is non-farm 2023. All right. Okay, so let's talk about some of the advantages and the disadvantages of news trading first. Okay. I'll talk about the advantages and we'll go through the disadvantages. So we'll take a look at this separately. Number one, all the necessary information can actually be found on the economic calendar. So there's no need to delve deeply into technical and fundamental analysis. So let me just break it down here for a little bit. When we talk about news trading, we are looking at a fundamental event, right? It's actually a fundamental news release, but we don't view it the same way as a fundamental analysis. So fundamental analysis, if I can make it clear here, it's very different from what we are going to be talking about tonight, right? We are going to be talking about news trading. When we do our live NFP numbers, when we do our live CPI release, we are trading the news, right? We do consider the context on how that news release is actually going to fit into the fundamental analysis, but they're two separate things, right? Fundamental analysis is taking a look at all the information, all right, put it in together, and then we do our analysis, and we rely on a lot of the data out there. It requires you to have, well, number one would be experience. I don't think you can buy experience, and I don't think anyone can teach you what you get from experiencing it yourself. If you do have an economic background, if you take up economics in uni perhaps or at school, that should help out, but it's actually not going to give you the whole picture, because the way we look at the economic studies from an academic perspective, they are completely different to how we actually apply that to real life trading. But you'll get the basic understanding. You know what to look out for. You would understand how it, what number you should be expecting. How does that impact the economy as a whole? If you have an economic background, it will help. But if you don't have an economic background, it is something that you can still pick up. But that's a completely different thing. That's fundamental analysis. Okay. When we talk about news trading, we are trading the release of the news, and oftentimes the fundamental analysis and the technical analysis kind of stop working just for a little bit, right? Technical probably still applies more than fundamental analysis. With fundamental analysis, it kind of have a little bit of a delay to how we actually use those information. We'll talk more about that later on. Okay, but news trading, you don't need to worry too much. What we're going to go through today, it's actually what we do every month during the NFP release, as well as the CPI release. And I think the performance for 2023 wasn't that bad either. I think out of about 7 or 8 months that we've been doing it in 2023, I think we had about 2 losses, and the other ones are wins, like really quick gains anyway. So all the information is already there on the economic calendar. If you watch my Outlook every week, I provide what those numbers are, what to look out for, what to expect from the market as well. Okay. Events in calendars are ranked in order of importance, which helps in making adequate decisions. So, for example, the release today, we'll go through the economic calendar, but the release today for the trade balance, it typically doesn't have that high of an impact into the market. It might move the market if the number kind of, misses the consensus significantly. But typically a lot of traders kind of like, yeah, it's there, but it's not really important. So we know what to look out for, right? Not all news releases are going to be the same. Some of them creates a huge impact in the market. Some of them, barely cause a ripple, right? So we need to know, and they're actually ranked in order of importance. And I'll go through some of the trading economic calendars that I use. I actually use Trading Economics. Like that calendar because it gives you the consensus and the forecast as well. But a lot of you guys probably have some other sources. You can go to Octa's website as well. You can go to investing.com. A lot of you probably use this Forex Factory, which is probably one of the older sites out there. Still good, pretty quick, and pretty easy to navigate. Okay. Publication of statistical reports noticeably increases volatility, and this allows trader to potentially earn significant profits in a very short period of time. If you're curious about how we actually trade the news, you can actually still go back to the webinars that we did in 2023. You can still go through and review the NFE releases, the CPI releases, and most of our trades actually lasted less than 50 minutes, right? The record that was broken, I think it was about 2 months ago. We were in a trade for about 45 seconds. We got in, we got out, easy, done, right? Because it creates that impact in the market. It creates a lot of volatility. And as a trader, this is actually something that we want, right? You probably don't realize it right now because a lot of people are probably going to say, oh yeah, avoid volatile situations, avoid volatility. You want the market to be quiet. As an investor, yes, but as a trader, you don't want the market to be quiet. You don't actually want the market to stay flat and not go anywhere. If you take a look at the market this week, it's been pretty flat because everyone is just waiting for that CPI release, which is on Thursday. And if you have never joined our live inflation sessions or the live CPI sessions, I highly encourage you to join us on Thursday, which is the same time as this webinar, for the live CPI release, because this CPI release is actually going to have a lot of volatility into the market. Obviously, there are risks involved, but that's something that we want, right? High volatility, we get very quick movement in the market. We only need to stay for a very short while in the market, trade the breakout, get out, and be done with your trades, right? So the simplicity of a strategy for this one here, you just have to know how to open and close those orders without the need to learn any complex formulas. And that's basically the practice that we typically do for our theory and practice sessions for news trading. We want to set up some of the order types and how do you actually manage those trades. And I'll probably do some example as well. Hopefully it gets triggered, but we'll see what happens. All right. The other one, it's minimal time expenditure on trading, right? You know exactly when to access the trading platform, what actions to take, and moreover, the trading process itself can be completed in just a few minutes, right? As I mentioned before, I don't think we've ever exceeded 15 minutes when we open our trades. We open and close our trades with a maximum of 50 minutes window. And again, the record was broken about 2 months ago. We were in for a trade for about 45 seconds, not minutes, right? So it's less than a minute, news got released, digest the news. We already got out of the position. So we already know, right? For example, for the inflation number, it's going to get released at 8:30 in the morning, New York time. So you can set it up according to your time zone, and all you need to do is just be in front of your computer. Ideally, I would say about 30 minutes before the release, but we don't actually set up our trades until about maybe about 5 minutes before the release. So yeah, if you know those times, someone already asked, what's the best time to trade? I would say the best time to trade depends on what you're trading. For example, if you're trading the Japanese yen crosses, it'll be ideal if you track the Asian market and the US sessions. If you're trading the sterling or the euro, then there's no point for you to wake up early and trade the Asian session because typically it doesn't have that much of a movement until the UK or the European market is open. Okay, so I would base it on that. The other answer to that is if there's a news release, I think that's a good time to trade because then market would have enough volatility to get out of a certain range. It will actually start moving right around the news releases. Could move before, but typically it moves and react after the news releases. Okay. Oh, thanks, Chucks. Yeah, your comments. I really appreciate it, and your feedback, I do really appreciate it. Happy New Year to you guys, by the way, and I saw your comments on the Outlook today. I think I just replied anyway, but Happy New Year to you, Chucks. All right, so the disadvantages to news trading, obviously, the market situation doesn't always develop as predicted by logical thinking and common sense. And for this one, I am actually going to show you what happened during the release. So let me bring up the release here. It's actually very easy to kind of figure out what happened during the NFP release. This is basically the candle that happened during the NFP release, right? So let me give you a little bit of a context on how things might not work out as it should be. The NFP number, no matter how you dissect it, it's good. I already talked about this in the Outlook, but if you haven't watched the Outlook, because I think it was posted about a day late, the NFP numbers for December 2023, right? That was the NFP number that was released last week. The NFP number for December 2023 was above 200,000. And I can bring it up to you. I do not think we have actually seen an increase above 200,000 for quite a while. But let me just bring it up to you. So just 1 second while I'll load it up. NFP, non-farm payrolls. There we go. All right. So this is the release of the NFP number. And the last time we have a number that's higher than 200,000, if you guys can look at the chart, it's for September, right? It was at 262,000, and then October it was 105, November 173, and then December 216. So it's about 3 months. I would say about 3 months, right? It was hovering below 200, but overall, the end of 2023, I think the labor market is pretty resilient in the US. The NFP number still gains above 200,000. And for the number in November, it was actually revised down from 199,000 to 193,000. 173,000. And then we have that gain in 2016. So overall, the NFP number was actually really good, right? And also the unemployment rate was pretty stable at 3.7%. Market was expecting the number to go up to 3.8%. So let me just show you what it looks like. This is the economic calendar. So we have the NFP numbers and we have the unemployment rate. This is the actual release, 2016. This was the previous number, and there's a little bit of an R there. It says previously revised from 199,000. Market was expecting just 170,000 gain. So that's actually a really huge gain. And the unemployment rate was at 3.7%. Market was expecting it to increase from 3.8 to 3.9%. It actually stays at 3.7%. The average hourly earnings also great. It stays flat at 0.4%. Now, with all that positive numbers, the logical thinking, right? If we go back to the slide there, the market situation doesn't always develop as predicted by logical thinking and common sense. Because by right, if we take a look at those numbers that I just showed you, what should have happened on Friday was for the US dollars to strengthen, right? But this is basically what happened. It dipped down, and then it kind of loses strength, right? If the US dollar strengthened, obviously the Euro USD would actually fall. But it didn't fall. It actually bounces up and went up about 100 pips to the upside. So this is where it comes in, where it starts kicking in that, you know what, the data was good, right? Supposedly, logically, it should strengthen the US dollar. But it didn't do that, and I can explain that to you right now, why it didn't do that, okay? But you need to understand the context, because if you don't understand the context, if you never had that experience, this is something that's probably hard to decipher. So let me explain what happened here. If I were to zoom in and show you what really happened with a 5 minutes chart. All right, this is basically what happened. During the news release, we have that drop there. This is during the release, right? We do have the US dollar strengthening for a little bit. It actually strengthened quite a lot considering the scale of things. It went down about 45 pips, 43 pips, and then it quickly bounces back in just a few minutes. We had overstayed in that trade by going short the euro. It would actually work out that it's actually going to go against us. I actually did a live NFP trade on Friday, but it wasn't on this main channel here. But just to give you a little bit of an insight, I was there, I was trading it live. But what happens here is that we have several key levels to watch out for. We got 1.09, obviously, and it kind of bounces off that 1.09 support. Okay, if you don't know what this 1.09 and why it bounces off, we actually did a webinar series on smart money concept. Chucks was just complimenting us for that. I really appreciate it. But yeah, you guys can watch that session. It's still on the YouTube channel anyway. It's on the Octa Brokers channel. Okay, but it bounces off 1.09, goes all the way up to 1.1. This is where it doesn't make sense because it's supposed to strengthen the US dollar. So why does it do the opposite? Why does the US dollar weaken? Now, the simplest explanation is during the first week of 2024, last week, a lot of people are still away. A lot of traders are not trading the market, so we actually do have a lower volume in the market. So what happens last week is not indicative. It doesn't reflect the real sentiment in the market because there's not a lot of traders trading the market. But once Monday kicks in, what happened is that the market starts going flat, right? And it's unable to achieve a higher movement than the Friday's high. We can see what happens here. In fact, it just starts to go down closer towards 1.09. Okay, so that's where we talk about some of the disadvantages is that you need to be really careful with the news release. Sometimes it doesn't make sense. Sometimes it's illogical because we need to understand the context. So if you don't understand the context of what's going on, it doesn't make sense to you, right? It's illogical. Why does it bounces off 1.09? But for us traders that know, where to find the key levels, we understand the importance of 1.09, and this is also something we talk about in the outlook as well. Okay, all right. The other one is that not all news can cause significant market reaction. And I would actually bring in today's releases. So I'll show you what's on for today. This is what's on for today. We have the Tokyo Core CPI numbers today. It actually doesn't have that much of an impact into the market because the Tokyo Core CPI is not the key inflation number that we're looking at from Japan. Now, for now, at 8:30, which is in about 8 minutes time, we have the Canadian balance of trade. We have the US balance of trade. In terms of its importance, I can highlight this and it doesn't appear as a high impact news, right? If I were to highlight the high impact news, the Canadian balance of trade is a high impact news, but you don't see anything about the US balance of trade. But if I were to just filter it to go to the medium impact, it starts showing up. So it might cause a movement in the market, it might not. Okay, if the balance of trade just comes in at negative 65 billion, that wouldn't be too much of difference from the previous number. And obviously the breakdown of the balance of trade, we need to understand the exports, we need to understand the imports, whether the import is actually higher than the exports. That's actually going to be bad for the US dollar. If the exports is higher, then obviously that's going to be good for the US dollar. But again, this needs it requires an understanding of the fundamental analysis. So for this one here, it's probably not going to be a high impact. But if I were to filter just high impact for this week, what's going to show up? It's actually on Thursday. That's going to be the inflation number from the US. Obviously, that's going to have a huge impact. And if you are following what's going on in China as well, just for several currencies that requires that knowledge, then the Chinese inflation numbers is probably going to be important. Okay. But that's how we filtered the news. Like today, maybe we don't need to trade because we understand that people are waiting for the inflation number. It might actually not move the market. But if we want to trade the balance of trade, we could still trade it. Okay. All right. Got sidetracked a little bit. If you're unable to accurately guess the market direction or analyze the situation, if you analyze the situation incorrectly, you may experience significant losses because of that high volatility that we saw during news releases. Sometimes it does If the market goes against you, you could actually be in that negative territory really quickly. You could be in the positive territory really quickly as well. So I guess it goes both ways. Okay, so we need to have a little bit of an understanding in how to actually trade the news releases. The bonus promo code, it's non-farm 2023. Occasionally, sometimes members of central bank speeches, how do we know their speech will impact the market or will not? Depending on voting members, we need to understand how important that voting member is. If it's not, I wouldn't say priority, but if it's not a key figure in the central bank, it probably wouldn't have that much of an impact. All right, so we have to go through this very quickly. I got sidetracked a little bit, but the most profitable news for trading, they can be divided into two categories. We got the hot unexpected news. That would include terrorist attacks, military conflicts that we saw in 2023, natural disasters that just happened across the world post New Year, right? Especially in Japan. I think there was another quake again today in Japan, about 6 magnitude. On New Year's Day, it was 6.9. But yeah, natural disasters could create a little bit of a reaction in the market as well. During such times, national currencies become much stronger as investors get rid of stocks which are about to fall. Yeah, yes and no, depending on how we look at the context. But any unexpected news, those are unscheduled news, right? We don't know when it's going to hit. We don't know the earthquake's actually going to hit. And we don't know, like, for example, in Japan, earthquake hits on New Year's. And then on the second day, there was a plane crash in Haneda Airport. I don't think anyone can predict that. So those are unexpected news, right? So news category can be like that. And then we have the periodic news. These are news that comes out regularly, like the CPI and the inflation number. We actually know when the release is. I already have the schedule for 2024. So yeah, ahead of time, we know when it's actually going to get released. Includes the following reports for the companies as well. If you're looking at equity market and everything related to them, we have the earning calls, for example, right? The central bank meetings and monetary policy decisions, this is already out late. We already know when they're going to get, when the meeting is actually going to happen, when the announcement is actually going to be, okay? Quarterly GDP reports, for example, inflation indices like CPI, PPI, and core inflation, which is all happening this week for the US. We've got CPI on Thursday and then PPI on Friday. But yeah, we already know when it's actually going to get released. Index of businesses activity, the flash PMIs, I think that was released last week. All right, ISM Manufacturing Purchasing Managers Index, a PMI. Those are the type of news that we know is going to get scheduled. Unemployment data, whenever this indicator rises, the prices of assets fall, national currency strengthens, and vice versa, blah, blah, blah. Unemployment data, we already know when it's actually going to get released, depending on what you're trading. But the main focus for Forex traders would definitely be the US unemployment numbers, okay? Okay. So there are three main phases of price movement. Number one is the accumulation phase. This is where the most informed and forward-thinking insiders enters here. This is where I typically enter the position, and this is what I kind of gave out in terms of the outlook. It's where the market is actually in a range-bound market condition. And then we have the participation number phase, is where the technically driven traders enter here because they react to price action. Right, they saw a breakout. They want to jump in on the participation during news trading release. We are actually trading in that participation phase. Okay, and then there's going to be the distribution phase where public enters here by receiving outdated information, and this is where the smart money begins selling their positions to the less informed investors, leading to a potential reversal. I work as an analyst and as a trader. What happens when we start analyzing the market? We'll give that information when I was trading as an analyst. Not right now because I'm giving out the information as soon as I can to Octa clients. But when I was working as an analyst, I was designated to just inform the high net worth client first, and then after they done their trades and everything else, then we'll kind of push out the information to the general public. So if you have that information from the general public, it's usually too late. It's usually during the distribution phase, because a lot of key players in the market has already started to get out from the position. They're not opening up new positions. In fact, they are actually getting out from their position, and they need to kind of sell their positions to people that come in late. Okay, that's the harsh reality amongst these three phases. So if you are experienced enough, you would want to be in that accumulation phase, because this one here provides you with kind of a more minimum risk to risk, provides you with a good risk to reward ratio. Participation, you have to be quick about it. You have to understand what you're doing. That's from a technical perspective, or that's how the strategy is being laid out there. Distribution, you do not want to enter during the distribution phase, and you need to understand when that distribution phase happens, because during the distribution phase, you are kind of at the tail end of that price movement. All right, so it's 1:30, and we have the trade balance. It's already out, and I'm not really trading a trade balance right now. I'll probably put on a few trades on how we actually can trade that. But if we take a look at the market reaction here on the trade balance, we don't have anything. All right, news just got released, and I can show it to you right now. And let me just bring it up. There we go. We see a little bit of a movement in the market, but trade balance just got released. It came in at negative 63.2, which is an improvement over negative 64.5. The exports was down from 258 to down to 253. Imports was also down, but still high at 316.9 billion. And you can look at the market. We actually don't have a lot of price movement, because if there is a participation phase, what would happen is price would actually break out of this range here. Okay, so we're still in that sideways market, and if we zoom out everything, you can take a look at the price movement ever since on Monday. It's actually been flat about 1.0950 as the pivot level there. But if we measure the range, this would provide us with the estimated range for a breakout for this week. Okay. All right, got sidetracked a little bit, but let's go back. Okay. So there are three phases: accumulation, participation, and distribution. What we do pre-news is usually the accumulation. During the news release, it will be participation. And anything post-news release will be considered distribution. Really depends on the strategy as well. Should we look for positions? Should we reverse the trade that we have in accumulation? That will really depend on how well distributed it is. But you'll see the phase there. Accumulation is always a flat market. So if you see a sideways market condition, it's always an accumulation phase. Participation is when the breakout happens. Distribution is when all the other traders come in, really push the market really quickly to one direction. But it typically doesn't last very long. It's a very short movement in the market. Okay, so some general rules for news trading. You need to study the market and analyze the dynamics of the currency pair. You need to understand what you're looking at the very least. Get that. So if you are not trading US dollars, for example, maybe you're trading the Euro Pound, maybe you're trading the Aussie Canadian, you're trading the Euro Yen, the Sterling Yen, Pound AUD, then US releases probably don't have that much of an impact to your trading. But if you're trading the majors like the Euro USD, if you're trading gold, if you are trading the sterling, if you're trading the dollar yen, obviously any US releases is going to have a huge impact into the market. So you kind of need to study up on the market as well, analyze the dynamics of that currency pair. Is it important? Is it correlated to what the news releases is going to be? And then you need to assess the reaction of the currency pair to that latest news. Prepare for trading by marking relevant levels on the chart, which is something we are going to go through from practical standpoint tonight. Decide on your trading techniques, including when to open and close that order. So make sure you understand what you're doing. You don't just open an order and not know when to get out, right? If you're in a losing position, you should know when you should quit. And if you're in a winning trade, you should know when you had enough, okay? Choose an appropriate trading time frame. You might be trading 1 hourly time frame, but during news releases, I think a lot of traders are going by on the 5 minutes and 15 minutes time frame. What we do, we typically go by with the 15 minutes time frame, but I still reference the hourly time frame for the range as well. All right. You also need to determine the maximum risk for each order and consider using stop losses or maybe trading stops. So if it starts going in your favor and you start to lock your profit, how do you want to trail that trade? You need to consider that as well. All right, decide on the terms of the deal, whether it's actually going to be a quick trade, long term, lasting more than 1 hour. So before we, sorry, I'm just sweating up a little bit here. But yeah, before we begin any news trade, I typically talk about, what are we in for, right? Are we gonna stay in that trade for long, or should we just get in, get out as quickly as we can, right? And that's typically what we do every single month. We get in, we get out as quickly as we can. So that's why we have our short trades: 45 seconds, a minute, 2 minutes. Those are my deal, right? That's how I want it to be. I would say, I don't really want the trades to be more than 50 minutes. I don't want the trades to be more than half an hour because it might have a little bit of a different movement. A market could actually reverse on itself. So we need to understand the context. What are we going to be planning to do? Okay. All right. So here are the examples of the pending orders. We'll talk about the buy stop and the sell stop. Buy stops are order placed above the current market price. If you expect price to go above the current market price and to continue going up, breaking resistance, then you want to use a buy stop, right? Once it breaks resistance, you want to be in a buy trade. For sell stop, you're anticipating the market to go down and continue to go down. So you want to place an order below the market price and you expect price to continue to fall down, potentially breaking support level. Those are going to be your sell stop. So think about the buy stop and the sell stop, and I say stop, right? But it doesn't really stop. If I can rename it somehow, I would call it buy through or sell through, right? Continue buying or continue selling. That's what the buy stop and the sell stop is. Okay, so it creates an order level. Once that level is triggered, you'll be in a position to buy, continuing the direction of the market, or to sell if you expect the market to go down. So if you expect the market to continue to go down and you want to have the position open below a certain market price level, then you want to use the stop levels. The other one are called limit orders, because you expect market to hit a certain limit in the near future, and once the market has reached that limit, you expect the market to reverse, right? So if you expect the market to go through, you want to be using stop orders. If you're thinking the market could actually reverse at a higher price or at a lower price, then you want to use the limit orders. Okay, sell limits are order placed above the current market price. So market goes up, hit your order, and then you expect the market to go down. Then you use the sell limit. If you expect the market to go down a little bit and then bounces off a certain support, then you want to use a buy limit order. Okay, we'll go through with a few examples, so don't be too confused. But you need to understand very quickly during news releases the different order types, because it gets pretty hectic during news releases, and if you do things too quickly, you might actually place in the wrong pending order. Okay, so we want to practice with that tonight. Okay, so the buy stop and sell stop strategy. Number one, you want to be looking at a consolidation phase. Okay, remember the three phases that we talk about: the accumulation, the participation, the distribution. You want to look at a market where it is actually in an accumulation phase, right? And you can understand that the market is moving in a range-bound market condition. We call this the corridor of volatility. That's why we have a buy stop above the current price level and a sell stop below the price level. Now, because it's in a range-bound market condition, the probability of understanding or knowing that the market is actually going to go in one direction, it is actually less than, I would say it's actually less than 70%, right? So we get hints but we're not sure what it is. And in terms of probability, 70% is not great. I would say even 60%, but it's very close to about 50%, right? We have a little bit of an idea, but it's really hard to pinpoint because the market is in a range bound market condition, and market could react to news very differently. So we would consider having a buy stop above the current price level. If it does break to the upside, then we are in that trade. If it breaks the support level, then we actually want to have a sell position as well. Now, the question is, I don't actually really want to care in terms of what do I think the news release is going to be. Is it going to push a certain currency up or down? And I get this every single month, right? During our news trading, our live trade during the NFE and CPI session, people are coming in and asking, oh, is the Euro USD going to go up? Is gold going to go down? Is this going to go up? Is it going to go down? Is it going to go up? And my answer is always the same. I don't know. And I prefer to say I don't know, even though I know there might be hints. The reason being, I don't want to be too biased when it comes to news trading. So I'll just let the market react to that news releases. Okay. So we find a range bound market condition. We create a buy stop and a sell stop. And what happens is it breaks to the upside, triggers a buy stop, and you need to immediately cancel the sell stop, okay? Because you only want one trade. You don't want to have a buy position, market reverse, and then you get triggered a sell position, then you'll be actually hedged within that range. It's not going to be good. It's not pretty. Happens to us during, I think, about 3 NFP releases and about 2 CPI releases last year. We got sideswiped like that. Okay, so for this one here, buy trade was triggered. Cancel your sell stop orders because your buy stop has been triggered. You are in a buy trade and the market goes up. And once the market starts going up, you have to make a decision. Do you want to get out, or do you have a preferred target level? And if you do have a preferred target level, the safest way is always to move your stop loss to 0. That would mean when you move your stop loss to 0, you're trading without risk. And I like that as a trader. I like to trade without risk, and I think it's a good idea. And during news releases is always a good idea, because if the market reverses and hit your stop loss, at least you get out without any losses, because it's at break even. Because the market does move very, very quickly. So either it goes toward your target level really quickly, or it could actually potentially reverse. But if it reverses, you would have time to actually move your stop losses. You can move it to break even. I would call this break even. Move your stop loss to 0. So if it does hit your stop loss, you don't lose anything, right? I think that's a great idea. But if it does hit your take profit target, it's good for you. Okay. So those are the buy stop and the sell stop strategy. This presidential election has an impact, or it depends on the country and pair. Again, an election always has an impact, but it does depend on how it plays out, right? It would have an impact. I would call that more of a scheduled release. I don't think that's an unexpected news. We know when the voting results are going to come out during an election, for example. Okay. So let's do a few trades. Let's maybe do Euro USD, because right now in the Euro USD, we're technically still in a little bit of an accumulation phase, right? If you kind of take a look at the range here, this is still going to be the range that we look at for Euro USD. So you got a couple of options, obviously, for the CPI release. Hopefully this range still plays out fine. But yeah, you can create a buy stop order up there, or maybe a sell stop order down here. And this would be our corridor of volatility. And in terms of the size, let me just measure that. It is about, I would say it's about 50 pips in terms of range, right? 1.0925 to about 1.0975. Yeah, about 50 pips in terms of range. Okay, that would be our corridor of volatility. Now let's assume the news release is going to get, the news release, maybe there's a high impact news in 15 minutes time. I don't know. We don't have one scheduled. I'm just saying if there is, right? What we could do is actually trade on a little bit of a small range, right? So this is the current range that we have. this would be the smaller range that we have, right? So I can have a little bit of a buy stop. By the way, if you want to place your trade, this is on the MT4 on PC. If you're doing it on your mobile phone, it's actually slightly going to be different. But if you're on PC, you can right click on the chart and you can go to trading and you can just create a buy stop or a sell stop. I'm doing a buy stop just above there because what I expect is if the market does push up, it might actually go up a little bit higher. So that's where we have the buy stop. But just assuming there's actually going to be a news releases, we actually want to have our sell stop just below that range as well. So this one here, we already have that stop orders for the Euro USD. This is just an example, by the way, because there's no news releases of high significance in the next 50 minutes. We just had our trade balance. It doesn't create a lot of movement in the market. Okay, but yeah, that's how you place your stop orders. Now, if you are on your mobile phone, for example, let me just delete this. Right, I can go to new order. If you want to do it manually, you can go to new order and you can choose the type. You want it market executed, or you want it to be a pending order. I want it to be a pending order, and I want to have my buy stop at I'll say 1.0950. Yeah, about 1.0950, and I can place it there. Maybe I can also set up my stop loss and take profit. I want to take my profit at maybe at 1.10, and sorry, my stop loss at 1.09. My take profit is at 1.1. I can place that, and that gets put into the market, and that's basically the same thing as the way I do it with the right click. It's just much faster with the right click, sell stop, and then you can just adjust it. You can just click anywhere below the current market price and just adjust it if you want to, just drag to modify if you want to. Very, very easy. Okay, cool. Yeah, I'll leave this one here as it is. It might trigger, it might not, but let's see what happens. Okay, the other one is the buy limit and sell limit strategy. So for example, if you're looking at the previous high, for example, and you think that previous high is likely going to create a little bit of a rejection in the market, then you can place your sell limit at that level. What you expect here is that you expect price to go up towards that order, the sell limit. Once it hits the order, you expect the market to go down because you look at that level and say, oh, there's a resistance building up there. Maybe price will go up to that level and then it will actually fail, and then it might actually come back down. So in this example, that's basically what happens. We saw the market spikes up a little bit, takes out the sell limit order, all right? It goes up, and then it goes a little bit higher, and then it immediately fails. It kind of reverses on itself. This actually provides you with a very good risk to reward ratio because your stop loss is going to be really small. It's going to be at those resistance levels, but you need to be really sure when to use the limit orders, okay? Because the limit orders, it's not unusable. It's actually super useful if you understand what you're looking out for. So typically we don't use this during news releases because it does take things to be a little bit more complex. For example, if you understand the SMC, you understand the fair value gap, you know where the order blocks are, those are going to be helpful to you, and you should be using the limit orders, okay? Because you know when market is potentially going to get rejected. But if you don't have that experience, the limit orders is actually going to be a little bit of a harder order type to use because it does take it does require a technical expertise for you to be able to use the limit strategies, okay? All right, so let's do a little bit of a practice. For example, I would cancel this order. And in terms of the Euro USD, I do know we are going to be looking at about 1.09, right? So let me just adjust this to about 1.09, and that's where price bounces off, right? So what happens is I might anticipate leading up to the CPI releases, price could actually get pushed down to 1.09, but I still think 1.09 could actually be a strong support for the market. So maybe it'll go to 1.09 and then bounces up really quickly. So if this is the scenario I'm thinking about, I don't want to use a stop order because I want price to go down a little bit more, and I want to create a buy limit. Right? So what buy limit is, if price goes down to that level, it will bounce up and it will trigger a buy position, and then I can have my stop loss maybe slightly lower, very close to 1.09, for example, maybe at 1.0875 maybe. All right, I could have that stop loss at 1.0875. Okay, so maybe just somewhere there, just below that spike there, just 1.0875, that's my stop loss. And maybe I could actually target a little bit higher. Maybe I would take my profit at 1.10. Okay, so if you take a look at the risk reward ratio, it's really significant because what we're looking at here, we have about 28 pips of risk for a potential gain of close to 100 pips, right? In terms of risk reward ratio, that's more than 1, 2, 3. So it does provide you with a great risk reward ratio if you understand what you're looking out for, if you understand what you want, right? If you don't understand it, I don't recommend the limit order types because it does take some technical expertise. It's not as easy to just say, oh yeah, it's easy. I can say it's easy if you want to place that order. But to get it right with a high probability, you need something else. You need to be able to understand what the market is, what the context is, what are the key levels, and the reason why we expect any bounces from those key levels, for example. But just in case, if you think price is going to bounce off 1.09, I can have my limit orders. And if price goes up, maybe it'll go up to 1.10, and I would have my sell limit over there as well. All right, so I can still cage it. But it works differently for the sell limit. I want price to go up, take my order, and then come crashing down. Okay, so that's the sell limit that we are looking out for. For tomorrow's CPI, it's kind of mixed, right? We'll talk more about the CPI during the news release on the CPI. We have half an hour to talk about the context of things. We'll discuss that on the 11th. So yeah, make sure you're here on the 11th, where we're actually going to be trading the CPI live. Okay? So let's save it for Thursday. Cool? All right. So you can also trade after the news gets released as well. You can make some, more informed decision. For example, this one here, we could have waited for the first hour to see that 1.09 actually holds as a strong support for the Euro USD. And after the news release, you have about 30 minutes to think about it. I could have gone for a long position immediately on the new hour, have my stop loss here, and have my target at 1.10. That would be based on after the news release, because we saw price bounces off 1.09 up not in the initial run. We saw what market has done. The sentiment was still up, right? We saw the US dollar getting pushed back because price bounces off a very strong key level at 1.09. In fact, a lot of people are actually doing a limit order at 1.09. But again, you can make that decision after the news releases. So I don't think there's any rush that you should be trading during news releases, because you can trade it before news. You can trade it during news. You can trade it after the news. So feel free. Some people don't like trading news releases for several other factors as well. Sometimes you see the spread widen a little bit because liquidity dries up, right? Sometimes you might actually get slippage as well. You might not get your entry price at that exact price level if liquidity dries up really badly. Okay, so think about it. There are risks involved in trading news releases. So I think a lot of people might not want to take that risk, or they don't understand how to actually trade during news releases, so they would actually avoid it and wait until the market has settled down. They do their analysis peacefully and then make their decision. So no rush. Okay. All All right, so let's do a little bit of a quick test before we wrap up for tonight. All news can be divided into two categories. What are they? Hint, hint. One of them is something unexpected. Right? If you can type it in, that will be awesome. What type of orders is most often used in news trading? I'll take any answers for this one. And what type of pending orders that you have learned today, and when should each type be used in trading? So you saved this order that you showed. This one here, just an example. I wouldn't save it because there's no news releases for tonight. I'm not too worried, not too concerned. Right now, what you're looking at is still more of a range-bound market condition. But if you're looking at whether or not you should actually have a little bit of a trade, if you want to create a buy stop, if you can, right? You can do a buy stop there. You can do a sell stop here. But the logic behind placing these stop orders doesn't quite click. Because if I were to look at it based on key levels, I wouldn't want to have it at this price level. No, it's just an example. Right? For the buy stop and sell stop, I think the market is still waiting for a little bit of a breakout. Now, the reason why we're waiting for the inflation number, because it will take about 100 pips to actually break the range. This is actually the sideways market condition we are experiencing this week from that Friday's high movement. And this is the kind of the more realistic range that we're looking at this week. I'll go through the questions. If there's any questions I haven't answered, I'll be more happy to talk about. Bonus promo code is non-farm 2023. Okay, we talk about the central bank members. Yeah, presidential election has an impact on news. It does, depending on the country and the pair as well. Yeah. CPI tomorrow. We'll talk more about that CPI on the 11th. If you're thinking it's more of a mixed number, it is actually not a mixed number. We do have a little bit of an anticipation. I do know what the market is expecting for this week as well. I think the focus would actually not be on the core inflation. It will actually be on the headline inflation. Yep. So number one, all news can be divided into two categories. What are they? They are the unexpected news and the scheduled news or periodic news, right? Like the CPI. We have been waiting for that CPI numbers since about 2 weeks ago. We already know it's going to get released on the 11th. But yeah, those are the news releases that we could anticipate. For example, the NFP last Friday, that would also be one. Unexpected news, for example, the earthquake that happened on New Year's Day in Japan. Those are unexpected news. Okay. All right. Second question, what type of orders is most often used in news trading? The way we put the question here is like, it should be one answer, but I'll take two answers depending on what it is. But I do have a preference. Like a lot of people are probably going to be using one order type anyway. No take? All right. The order types that's most often used in news trading is actually stop orders. But yeah, if you want to use the limit orders as well, it could be there. So the type of pending orders that you know by tonight, it's the buy stop, sell stop, buy limit, and sell limit. There's 4 pending order types: the buy stop, sell stop, the buy limit, and the sell limit. And when should you be using that in trading? If you expect a resistance to be broken out, then you want to use a buy stop. If you expect a support to not be able to hold, then you want to use a sell stop. But if you expect a support to hold, then you actually want to use a buy limit because you expect price to go down, bounce off support, and goes up a little bit higher. You want to use a buy limit. If you expect resistance to fail, then you want to use the sell limit to get your position. And the reason why we're actually using this order type is sometimes we're not in front of the computer, right? So we might actually not be in front of the computer. And if you create this order, I actually don't have to be in front of the computer, right? I actually don't mind having a buy stop at 1.0950. The reason being, if we cross 1.0950, It does have a potential for a movement towards 1.0975, right? So it could actually go up a little bit higher, maybe about 25 pips to the upside. It would still make sense because I could have my stop loss, just below 1.0925, maybe 1.0924. I have my take profit 1.0975, I could do that because if it does break 1.0950 intraday wise, it might actually climb up a little bit higher. It does have the capacity for that because we're still within that range. Now, obviously, the new hour just kicked in. But yeah, I don't mind doing this trade. For example, if I know, from a technical standpoint, it's on a range bound market condition, technically it should just bounce back and forth between support and resistance. Then yeah, if it's bouncing off the current range, then I do anticipate if it does break 1.0950, it could continue higher towards 1.0975. That's one example on how we look at things. Okay. All right. So again, the code for to W deposit bonus, it's non-farm 2023. So make sure you are using this code if you're depositing into your Octa trading accounts. So the code is non-farm 2023. We will be getting new codes. I don't think we have. Hopefully I get it this week. But if we don't get it this week, it will still be valid. I think at least for this month, it will still be valid. Non-farm 2023. All right. Q&A sessions. No questions. Cool. All right, so what's next? We are going to be trading the CPI live. We also want to talk about what the inflation rate is, what's the consumer price index, what's the difference between the core inflation and the CPI, and then we'll be doing our CPI trades live. And that would be on the 11th of January, which is in 2 days' time. It's going to be on a Thursday. It'll be at the same time during this webinar as well. So we will be trading that live at 8:30 in the morning US time. So make sure you tune in on January 11th because this inflation number is actually very important. And I think the market is actually on the edge after the holidays waiting for a breakout to happen. And I think the breakout could actually happen during the inflation release on Thursday. All right, cool. Okay, then. Thank you all for joining in. Welcome back to 2024. I know most of you guys are probably still in the holiday mood, but yeah, trading is back full force this week. We expect huge volatility during the CPI release in 2 days' time. But yes, hopefully we'll have a wonderful 2024. We did great in 2023. We expect 2024 to be even better for all of us. All right, with that, let's wrap it up for tonight. Good luck with your trades, and I'll see you in 2 days' time.